Well, the shape of the trust remains pretty much diversified across growth areas within the Asia-Pacific region, excluding Australia. Within that, the largest positions would be in North Asia, China, and to a small extent, Korea and Taiwan. And then we balance that with notable positions in Southeast Asia, and then a balancing position in India. So these would be the three key areas. And there has been little change over the last 2-3 quarters. But within that, we have been arranging or rearranging some of the names within those regions. The trust has been relatively resilient, but has underperformed the index. The index over the last quarter or so till the March 2023 has been very volatile. January saw a carrying of momentum from the Chinese optimism of reopening that started in Q3 and Q4 last year. And we saw a very strong surge in Chinese equities in January that carried the region forward. After that, over the next 60 days or so into February and March, we saw a retracing of these gains as the concerns over recessionary risk, as well as still high interest rates and possibly higher interest rates in some markets, weighing down on positive sentiment in the capital markets. So during that volatile period, during the rally, we did reasonably well, but we gave back some of that performance. And over that period of time, we've lost about 200 basis points against the benchmark in a very volatile first quarter this year. Some of the changes in the portfolio have been actually relatively modest. There have been some changes in the names that we hold in a portfolio of about 60 over stocks. We have added 2 new stocks in China and taken away about 3-4 names in the March quarter. So nothing major, and these holdings are not large holdings. They are additions of about 100 to 150 basis points each. So just marginal tweaks. Among the additions have been Aya Hospitals, a private hospital in China that does a lot of optical and eye work, and Autohome, which is a integrated internet website or internet marketplace for automobile and car trading and purchasing activity. So 2 interesting ideas. They are not new things. They have been stocks that we've been looking and keeping track over the years. But given the volatility and relatively compelling valuations, we've added those 2 new names to the trust. And then we've tidied up some positions in Vietnam, replacing Techcombank with other more resilient holdings, and then also rearranging some minor names in Southeast Asia. So not a lot done, just around the edges, some moderate change in names within the trust itself. One of our holdings in China, Tencent, remain a core position for the fund, for the trust. And we find that it's a very compelling case where what started off as a gaming platform has evolved into a very comprehensive, diversified ecosystem for consumers and internet users in China. We have seen it steadily diversify its stream of revenue over the 10 years or so that we've looked at it and watched it. And even though over the last 3 years or so, there have been increasing regulatory risk with respect to trying to understand and contain some of the excesses of internet behavior or internet addiction in China with regulatory gaming restrictions. We see that as a group, it has continued to be very relevant to its users and customers and increasingly important in the Chinese internet ecosystem. So that's one stock that we like. We've held throughout the COVID period, and that's one that we have been adding to selectively during periods of weakness in China. The second one that's interesting would be another core holding, HDFC. It's a mortgage giant in India, and it's really efficient, has strong market share, very well run, and has a very low cost structure that's very competitive, one of the lowest we see in the Asia Pacific region. It's continued to develop products and services that are relevant to the banking consumers in India. And it has, in the process of acquiring and merging, which is with its associate investment in a commercial bank, HDFC Bank. And we think that over the long term, after these integration activities have been executed well, we expect it to strengthen its position and continue to grow within the banking and financial segment in India. There are some medium-term themes that are very exciting to us. The rise of the consumer space in Asia with rising incomes and beneficial and attractive demographics. This will feed into quite a few verticals. We would like what we see in the healthcare space that will address the aging demographic in Asia. We like what we see in the financial services space, which we think will continue to evolve and grow increasingly sophisticated as its consumers also grow increasingly demanding. These are two themes that we think will be interesting. Third theme would be the increasing greening of industry and utilities in Asia. And we see quite a few stories there that are promising in North Asia as well as in South Asia. Valuations are not necessarily cheap, so we do need to be very selective here. But these are the medium and the long-term themes and structures that we look forward to, benefiting from. Nearer term, we think that there are some headwinds. The recessionary risk in the region remains present, not in all markets, but we do see some weakness in some of these markets. So we need to be quite watchful over the next 12 months. Inflationary risk and interest rates remain relatively high and could go higher in some of these geographies as well. And these are short-term headwinds that we need to navigate through. But over the longer term, we are very hopeful and we have conviction that Asia remains the place that we would want to have exposure to.